joining us for this panel. We're going to start with Mr. Kamath. He is the chairman of IBA and chairman and MD of Punjab National Bank. Also with us, Werner Steinmüller. He is the head of Global Transaction Banking and a member of the Group Executive Committee at Deutsche Bank. And Suresh Kumar is the CIO of Bank of New York Mellon. Thanks very much, all of you, for joining us. Now, you're all speaking at the conference, talking on different subjects. So I know, Mr. Kamath, your big subject is financial inclusion. Werner, you're going to be talking a lot about regulation, I'm sure, and Suresh about technology. So what I'd like to start, kick it off, what is your main call to action for the community here? What do you want them to go away with and be doing when they leave Dubai?
Well, today we are meeting at a very crucial juncture, where we have a technology-driven, state-of-the-art banking facilities and remittance facilities for the developed countries and the people who can use it. But at the same time, we find that more than 60% of the population in the world is not having even a banking account. So these are two diversities, and we need to manage and try to bridge this gap, because if you don't bridge this gap between the haves and the have-nots, it is going to create so many issues, including a sort of a social unrest which we are seeing in some parts of the country. So the main agenda for us should be that how do we reach to those people who are at the bottom of the pyramid, who need basic banking facilities of opening a savings account, and probably do minimum financial transactions. Now we have one more sector of the people, that the migrant laborers who moved from their places to other places for livelihood, who also have a need to remit money back to their people.
A lot of them in Dubai.
Yeah. A lot of them in Dubai. Now, if you don't provide them an opportunity to send the money in a cost-effective way, in a hassle-free way, at the fastest thing, and they are always looking for informal channels where there is a risk in terms of loss of money, and also in terms of not being able to reach money to the people. So when we are here in Dubai talking big about money transfers, I think I should look at those people who are not even knowing that there is something like this exists, and try to reach out to them. I think that should be the agenda.
And how are you at the Punjab National Bank doing that?
See, we are in India, the financial inclusion has been taken in a big way, and we are trying to reach out to every one of the 600,000 villages in the country. We have three ways. One is the brick and mortar banks, which we have already set up. We have about 100,000 branches of the banks working. Plus, we are now working on a model called business correspondent model, wherein we appoint either a company or individuals as business correspondents, who will set up their small offices in the villages which do not have banks, and are also given a handheld device so that they are mobile. They can reach out to the people and then reach out the money to them. The government has also supplemented this effort in two ways. One is that they have set up a unique identification authority which gives a unique identity for every citizen of the country. And that unique identity number becomes the number for the flow of social benefits. So the government has decided that all those social benefits will be channelized through banking, and the unique identity number will be the key. So the government will have a unique identity number, and they will remit the money. It will look at the account, where the account is maintained, and the money goes there. And if required, the business correspondent agent will go out to the people and deliver money to them. We have gone a long way in this, and now the government has taken one more step. It is not only for the people who are not having money, but also for the people who are having money. One of the major initiatives of the government is to transfer the subsidy on the LPG cylinders through the bank accounts. So anybody who buys a LPG cylinder today will pay the full money, and whatever the subsidy portion the government is giving will flow back to his account within 24 hours through the unique identity number. So this is how we are trying to take banking to the remote corners in the country, and it's going in a big way.
So that's quite interesting. We've got a banker here in India who's very positive about government and working with the banking industry. I know, Werner, you're going to be talking a lot about the regulation issue, about how banks are working with governments, or how governments want the banks to work in the future. Is that as positive as the situation in India?
I see it more critical. To be very open, the relationship between the banks and the society is broken, at least in the Western world. And we have to fix it. And who is fixing it? These are the regulators. What the regulators are doing, they are imposing more and more rules to us. And I think we have to go back to a constructive cooperation. How to get back to the constructive cooperation is really to work on our behavior. I think transaction banking is cash management, trade finance, securities world, trust is ideally positioned to bring this trust back, because we are helping the world economic to move the funds away, to make secure payments through letters of credit, and I think here we are absolutely key. When I'm talking about regulation, I want to specifically mention two things. One is a leverage ratio. The regulators are not differentiating with highly structured investment banking products and letters of credit. Yes, letters of credit get a kind of discount, but they are now above the line, not knowing what it means for the world economy. Because this is slowing the world economy down, because the banks are less flexible. My message is, using this example, think more what you are doing. Second regulation, Europe related, is SEPA. SEPA is coming. Key message to the corporates, please prepare yourself to be ready for SEPA. Speaking with clients, no, some of the clients are not ready yet. Please do it, it's still some months to go, but it's a law, it comes February 1st. The banks use sophisticated solutions, don't go for cheap converter solutions. There's a risk, we are missing information, this is not straight-through processing, and these are the key messages I'm having: to be efficient on the SEPA side, invest some money, to be prepared, and on a leverage, make the leverage ratio more flexible, and don't compare really products which are related to the economy with investment banking products.
Since I think regulation is one thing which I think we cannot avoid, so we have to live with it. So one question which is weighing in my mind is that can SWIFT do something in this? Because it's being implemented in different parts of the countries in different ways. If SWIFT can play a role and say that this is how we help out the entire community in implementing this, that will go a long way in standardizing even on compliance, because SWIFT has played a very important role on standardizing. So I would say that in this conference, can we think of SWIFT playing a very important role in ensuring compliance, so that, and if they can even spell out what they want to do, that will help the communities to prepare themselves with a strategic plan to collaborate themselves with the effort of the. So I think all of us can move in one direction where probably the compliance becomes less painful and becomes more welcome, because all of us are moving in a very standardized approach.
I agree, but I have a short comment. The regulator have to accept the standardization around the globe, because otherwise it doesn't work.
We need to work, as a community, we need to work with the regulator and saying that, look, this is what we want to do. If you have any suggestion, let me know beforehand.
Not easy.
Not easy, but then we can't give up.
I tried it.
I don't think.
So we're going to come back to some of those points, but Suresh, I want to bring you in now, because if regulation is one big hot button issue, technology is the other big hot button issue. So you're going to be talking a lot about technology over the next couple of days. Tell us what you want this community to do with regards to technology.
Yeah, the pace at which the technology is changing is phenomenal. Looking at Google and Facebook and Twitter, they've been able to show with commodity hardware and open source software the kinds of scale and the kinds of client insight that you can gain is great. But much of the global financial infrastructure still runs on legacy technologies. I think there is a huge opportunity for us and SWIFT to figure out how do you transition from the legacy technology to the newer one and still keep the place running. So we're going to be talking a lot about big data, cloud computing, and open source and commodity hardware.
And Werner mentioned, you said banks, should spend some money. What kind of figures are we looking at here? And you say the sophisticated type of things they should be putting money into instead of the cheaper options. Can you be more specific on that?
Liberating, and Suresh is saying, it is very important we spend the money, but we have to spend the money what the regulators are telling us. So money for real investment is more and more difficult to get. There's only one way to increase the budget. However, with the constraints on the equity ratio, on the leverage ratio, the banks have to cut cost. So regulations is not helping us in competing with the new technology because you have to fund it. And this is a bit the situation, regulations versus spending for money and cost cutting. It's not easy, but each bank has to do the best and invest in technology. If you're not investing in technology, you're losing your competitive advantage.
I do think that there is an opportunity as we deploy technology to deal with the regulation, that in addition to taking care of what it's supposed to do, we can also make sure there are new products and services that we can offer to our clients, because at the end of the day, the regulations is for a better investor protection as well as for, for the benefit of the clients and risk management.
Everyone is talking about, banking has changed, it's gone back to get closer to your client. We've got to know more about our client, and people kind of stop there. When you say, talk to me about specifics about what are your clients asking you more for, and how are you going to get closer to them to give them what they want? Because there are conflicting demands. You want them, you want to make money from them, and they want more from you, more value at a lesser cost, while you've got to grapple with the cost of regulation and all these things. Right. So if you can just ask each of you, from where you sit within your banks, what are clients really asking you to do, and what measures and steps specifically are you putting in place to reach your client and grow your client base? So let's start with you.
If you're talking about a corporate client, his requirements are totally different, and if you're talking about a rural client, his requirements are totally different. But if you want to summarize what the clients are looking for, as you rightly said, they look for the best of the product at the cheapest price. So we need to work on to see that. One way we keep on looking at how do we improve upon the existing products, have a market intelligence, think about what the customer wants, and then develop products and services to that. Now there is a cost involved in this when you innovate, when you get into new things. Having done that, probably then you have to work out on seeing that how do you reduce the cost, because the customer will not be willing to pay a price which you are demanding from him. So you will have to work. So it's going to be a very tightrope walking from both sides, but in case you have to be surviving in the industry, competitive, you have no other option but to continuously look on the new products and services, and then reduce the
Can you
cost.
give us an example of what you are doing to get closer to the customer?
Yeah, I think I talked about the financial inclusion, and I talked about how are we reaching out to the customer. Now we found that a rural customer was spending almost one full day to do a banking transaction, whereby he was losing his income for that day. Forget about the expenditure he's incurring in doing a banking transaction. He was equally losing his wages just to put through a transaction and get his money out of the account. Now what we are doing is that we are doing to see that we have appointed business correspondent agents at village levels. Now these agents will be available to the people either in the early morning hours or in the late hours, so that they can do the banking transaction at their convenience. Now if they can't do that, we are also seeing that whether the business correspondent agent can move to his place and facilitate a transaction to him. Now if you can reach out to the customer and give him this facility of doing the transaction, we are in a position to encourage him to develop a saving habit, which is absolutely missing that. So once you reach out to him with banking products and services, you encourage him to save, and then probably he becomes a good customer to you in terms of taking your products on the lending side also. So this is how we are trying to reach out to the bottom of the pyramid and see that the large unmet demands of the customers of basic banking needs are made available to them.
What I see as the most important thing is stability. When you are in payment clearing system or security system, number one is stability of your system. Number two, make it safe to cyber attacks. We see more and more cyber attacks are happening in our system. Thirdly, straight-through processing. I hate paper, because paper is a source of mistakes. And also connecting our systems with a client, and last but not least, have a very good invoicing system, because the customer really should know how much transaction for which price we executed for them. To be very open, more transparency between the client and the banks, and a good execution.
So clearly there is a consumerization of IT. What people use at home, be it a smartphone or a Google-like interface, they would like to be able to get at any information, any place, using any device. So to that end, I think a lot of our focus is around how do we capture the way our consumers and businesses transact with us so that we can continuously improve the way we deliver our services.
And how are you doing that? Give us an example.
So, big data, I think, comes in handy because, it used to be, it was pretty expensive to store a lot of data. Today, with the commodity hardware, we can actually store fairly literally every single transaction that someone does and keep them for a long time. And that gives you lots of insights as to how people actually use the product, so we can continuously learn from that experience and improve the product.
Okay, well, we've got to leave it there. Thanks very much to all of you for joining us.